Mining stocks fell out of favor towards the end of last year. Investors were selling really because they were worried about trade wars between Donald Trump and China. And I think also worried about a little bit of a slowdown in the growth rate of the Chinese economy. I'll stress it's the growth rate because China is not particularly slowing down. It's just the rate of growth has pulled back a little bit. And when you consider how much growth it's had and how big the economy is, I mean, it's not surprising that there's a little bit of relaxation there. But actually the Chinese government this week are talking about how to try and maintain that growth as best they can and stimulate the construction and infrastructure markets, which they're doing. So although the market came off last year, it's now catching back up again. Confidence is returning. The world hasn't collapsed. The sky has not fallen on our heads. And mining stocks continue to produce great dividends. Well, commodity prices are rising. Bulk commodity prices are still at very high levels. Certain things have gone wrong in the world. The terrible disaster in Brazil, that has driven iron ore prices much higher. And this is going to drive dividend growth for the major companies, Rio Tinto, BHP, even a bit of Anglo American. So yes, there's a lot going on, a lot of profit being made in this sector, and a lot of investors looking for that yield. Countries always have the potential to throw surprises at us. The Tanzanian president went a bit crazy last year and made life tough for a couple of the miners out there. South Africa has been very difficult for many years. We are expecting Cyril Ramaphosa to reform the nation generally, to remove a lot of the corruption. And actually, seeing as his history was in the National Union of Mine Workers, and he was seen as very helpful to the mining companies back in those days. So we're expecting Ramaphosa to actually be beneficial towards the mining industry going forward. So we see South Africa as improving slowly, but improving surely. Small cap miners always do, whenever there's any downturn, particularly a downturn in sentiment, the small caps get hit harder than the large caps. And I think now we're starting to see some life returning to these stocks again. So yes, the small cap market has had a bit of a tough time, some liquidity probably drawn out of that, but it does seem to be showing signs of growth. Companies are able to come back to the market now for new money, and yes, confidence is returning slowly. The big key theme that we're seeing now is not only are the Chinese moving to invest in a lot of the strategic resources, the battery metals, the bulk commodities, but we're now seeing the United States has pledged another $30 billion to the OPEC fund and are directing that into strategic metals. So they've told them to go and look for smaller mining companies to invest this money into. And this is a first, because OPEC were really focused on investment in projects for healthcare and reform and the sorts of things where they were looking to make a social difference. Now they're being directed into investing this money into strategic metals that are important to the United States going forwards. For investors who are interested in battery materials, we would encourage investors to look at Phoenix Global Mining, which has copper and cobalt in Idaho in the United States. Atalaya, which has the old Rio Tinto mine in Spain, and they're running it really well. That's a good copper production operation with good cash flow coming out of that. Or look at Afritin, because tin is going to be a key commodity from a battery perspective. There's been a lot of work on that done, and most of that is to solder the connections for all the battery packs going in the electric vehicles and things like that. We know that the European Union is also looking to try and develop some projects, and the Indian government has said that Indian state companies should also look to invest in cobalt and lithium going forwards outside India. So that the interesting part there is they're saying, please invest in projects outside India because we're going to need these commodities going forwards. With lithium stocks, there are a couple of companies in London that are of interest. Premier African Minerals with its Zulu deposit in Zimbabwe. And Zimbabwe is a good jurisdiction for mining. I know the government's still a bit bit up and down, but actually from a mining perspective, things are relatively stable. And Iron Ridge, which has a new project in Ghana. It looks like it's going to be quite a big lithium project, and it's on the coast, so it's very easy to get the spodumene concentrate to port and get that material to a new processing hubs in Europe or over to China, where things are already very well established.